Okay, good morning. Tomorrow we will have our class and we are going to discuss the problems, your assignment in consignment sales, which I have already posted in the canvas. So you work on the 10 problems. Tomorrow I will be grading you based on how you will answer the problems. So that for tomorrow, we will be discussing no installment sales and plus whatever questions that you will raise in connection with consignment sales, which we are going to discuss today. Then on Friday, we will still have a class and I will give you your exercises at a convenient time for everyone. So, possibly I'll give it at ano na lang, mga 11:30. So anyway, it's good only for 20 minutes. So mga 11:30 to 11:50. That will be given on Friday, October 23 na exercise. Then on Monday, we will have our first final exam. So the first final exam that will be given and I think the only time that you are available is between 11 to 1, 11 to 1:30, since the only class or the only section with the class at 9 to 11 are the 9 to 11 class of mine and 5:30 to 7:30 class of mine. So anyway, we will have the exam at 11 to mga 1:20 siguro. 11 to 1:20 since you do not want the exam to be given the evening. So I'll just give it during daytime and if we can begin at 11 o'clock on Monday. So anyway, we will discuss this on tomorrow or Friday. Still, we will be meeting. Okay? So this morning, we are going to focus on consignment sales. This is a short topic. In fact, in the book of Dayag, you can find this in chapter 11. It's only a part, the last portion of chapter 11, beginning with page 915 to page 925. So it's here where you have your consignment sales. So actually it's module number 15 and tomorrow if we can begin or if not on Friday another short topic that's module number 16 which is about insurance contracts. So for this morning's lecture, consignment sales, you refer to the PDF in module number 15 in Canvas, and you can refer to the book of Dayag for the last portion of chapter 11. That's on consignment sales. So that we will be solving the problems in Dayag with regards to consignment sales. Okay? Now, consignment arrangements. Under consignment arrangement, an entity called the consignor delivers goods to another party called the consignee. who undertakes to sell the goods to end customers on behalf of the consignor. The consignor recognizes revenue only when the consignee sells the consigned goods to end customers, because it is only at this point that the control of the asset is transferred to the customer. Now, accordingly, the consigned goods are included in the consignor's inventory until they are sold to the end customer. Until they are sold to the end customer. So in that case, the consigned goods are included in the inventory of the consignor until they are sold to the end customer. The consignee records the consigned goods through memo entries only. So take note of the entries or the memo entries. Freight and other incidental costs of transferring consigned goods to the consignee, such as transportation and insurance, form part of the cost of the consigned goods. Repair costs for damages during the shipment and storage and other maintenance costs are charged as expense. So in other words, you have to distinguish if you have your transportation or you have your freight and insurance, this will be added to the cost of the consigned goods. However, repair costs for damages during the shipment and storage and other maintenance costs are charged as expense. If the consignee shoulders the freight and other costs necessary in bringing the inventory to the consignee's location and condition for sale. So in that case, it is the consignee. If assuming the consignee will be the one to shoulder the freight and other costs for that purpose. If the consignee shoulders the freight and other costs necessary in bringing the consignee or the inventory to the consignee's location and condition for sale. So you have now your freight and other incidental costs. In a typical consignment, the consignee is entitled to commission based on sales. In other arrangements, the consignee purchases the goods simultaneously with the sale of the goods to the final customer. In effect, the consignee's commission is based on the markup he made on the final selling price. Commissions are accounted for as expense by the consignor and as an income by the consignee. Accordingly, commissions do not affect the cost of consigned goods. The fact that this is treated as expense by the consignor. Commissions earned by the consignee are normally deducted from the amount to be remitted to the consignor. In cases where commission is given to the consignee in advance, the consignor records the advance commission as receivable and not the cost of inventory. When the related goods are sold to the end customer, the consignor recognizes the receivable and recognizes commission expense. When the consignor goods are sold or when the consigned goods are sold to the end customers. So in that case, we are now talking about when the consigned goods are sold to end customers. The consignor recognizes revenue at the gross amount of consideration, such as the sales price agreed with the consignee. The consignee recognizes revenue at the commission or fee which it is entitled. Principal versus agent considerations. When another party is involved in providing goods or services to a customer, the entity shall determine whether it is acting as principal or as an agent. The entity is a principal if it controls the goods or service before the goods and service is transferred to the customer. However, the entity is not necessarily, for that matter, there is a slight revision to that. So will you take note of that's necessarily. Please make the corresponding correction to that. The entity is a principal, no? The entity is a principal. Take note that we have a slight revision to the case of consignment sales. So take note that the entity is a principal. Now that's under principal versus agent considerations. The entity is a principal. Okay, is a principal, which if it controls the goods or service before the goods and service is transferred to the customer. However, the entity is not, okay, however, the entity is not necessarily a principal. However, the entity is not necessarily a principal if it obtains legal entity title of a product only momentarily before legal title is transferred to the customer. Before legal title is transferred to the customer. A principal may personally satisfy a performance obligation or it may engage another party, for example, a subcontractor, to satisfy some or all of a performance obligation on its behalf. When the performance obligation is satisfied, the principal recognizes revenue at the gross amount of consideration. The entity is an agent if its performance obligation is to arrange the provision of goods or services by another party. When the performance obligation is satisfied, the agent recognizes revenue at the commission or fee which it is entitled. The following are indicators that an entity is an agent and therefore does not control the goods or service before it is provided to customers. Another party is primarily responsible for fulfilling the contract. The entity does not have inventory risk before or after the goods have been ordered by a customer during shipping or on return. The entity does not have discretion in establishing prices for the other party's goods or services, and therefore the benefit that the entity can receive from those goods or services is limited. The entity's consideration is in the form of a commission, and the entity is not exposed to credit risk for the amount receivable from a customer in exchange for the other party's goods or services. Okay, now before we go to the problems of diag, now let's have a short problem with regards to consignment sales. So will you take down the problem? ABC Company enters into a consignment arrangement. ABC Company enters into a consignment arrangement with XYZ. ABC Company enters into a consignment arrangement with XYZ. Under the arrangement, ABC Company transfers goods to XYZ. Under the arrangement, ABC Company transfers goods to XYZ, which XYZ undertakes to sell, which XYZ undertakes to sell on behalf of ABC Company, which XYZ Company or XYZ undertakes to sell on behalf of ABC Company. In exchange, XYZ is entitled to, in return, XYZ, or in exchange, XYZ is entitled to a 20% commission based on sales. To a 20% commission based on sales. Now, the following are the transactions. The following are the transactions. April 1, XYZ accepts delivery of consigned goods. April 1, XYZ accepts delivery of consigned goods with a sales value of 390,000. With a sales value of 390,000. The cost is 220,000. The cost is 220,000. So the sales value is 390,000. The cost is 220,000. April 3, XYZ sells consigned goods. XYZ sells consigned goods costing 55,000 for 100,000. XYZ sells consigned goods costing 55,000 for 100,000. For 100,000. Okay? ABC is not notified of the sale. ABC is not notified of the sale. ABC is not notified of the sale. Next, April 7. XYZ makes the weekly remittance of the sale proceeds. XYZ makes the weekly remittance of the sales proceeds, net of commission. XYZ makes the weekly remittance of sales proceeds, net of commission. Required, prepare the journal entries in both books. Prepare the journal entries in both books. Okay? So let's now create two columns. Column 1, ABC Company, and column 2, XYZ. Column 1, ABC Company or consignor, while column 2, XYZ or consignee. Column 2, XYZ or consignee. Now let's begin with April 1. Both parties prepare only memo entries. So on April 1, the transaction, both parties prepare only memo entries. So memo, column 1, memo, column 2. Then we go to April 3. April 3, consignor, no entry. No entry because the problem states that, okay, no entry because the problem states that the consignor was not notified of the sale. The consignor or ABC company was not notified of the sale on April 3. In case the consignor is notified of the sale, such consignor shall recognize revenue on this date. Okay? So on April 3, the consignor has no entry because it was not notified of the sale. In case the consignor is notified of the sale, then it shall recognize revenue on this date, which is April 3. Now, it should prepare an entry debiting receivable from XYZ, debiting receivable from XYZ, 80,000, debit commission expense, 20,000, and credit revenue, and credit revenue. So the entry of the consignor will be to debit receivable from XYZ, 80,000, debit commission expense, 20,000, and credit revenue. Now, that is in case the consignor is notified of the sale. Whereas in our transaction, the consignor is not notified of the sale. So, we have the alternative treatment in case the consignor is notified of the sale. When the consignor is to debit receivable from XYZ, 80,000 debit commission expense, 20,000 and credit revenue. Okay? Now, in practice, it is uncommon that the consignor is notified of each sale. Okay. More commonly, the consignor receives notice of consignee sales on scheduled dates as weekly, monthly, quarterly, depending upon the arrangement. So, more commonly, the consignor receives notice of consignee sales on scheduled dates, such as weekly, monthly, quarterly, or depending upon arrangement. Okay? So, in our transaction on April 3, the consignor has no entry, but the consignee on April 3 will debit to cash, consigning a column, debit to cash, 100,000, credit commission income for 20,000. That is 20% of 100,000. So credit commission income, 20,000 and credit payable to ABC or payable to consignor. So repeat, the entry of the consignee on April 3 is to debit cash 100,000, credit commission income 20,000, and credit payable to ABC company for 80,000. In such connection, on April 3, the consignor has no entry because it is not notified of the sale. Next, on April 7, the consignee makes the weekly remittance so that on April 7, the consignor debits cash, 80,000. Debit commission expense 20,000 and credit revenue. So debit cash 80,000. Debit commission expense 20,000 and credit to revenue. On April 7, the entry of the consignee is to debit payable to ABC Company for 80,000 and to credit cash. So debit payable to ABC Company for 80,000 and to credit cash. Now take note that we are now dealing with reciprocal entries. So repeat, on April 7, the entry of the consignee is to debit payable to ABC Company 80,000 and credit cash. Now the consignor, aside from the entry to collect, will make the second entry. Debit cost of goods sold, 55,000 and credit inventory. So debit cost of goods sold and credit to inventory. Now that is assuming that the consignor uses the perpetual inventory system. The consignor uses the perpetual inventory system. So the entry is to debit cost of goods sold by 55,000 and to credit inventory by 55,000. Okay? So those are your entries in connection with consignment sales, which we have the entries to be prepared both by the consignor and the consignee. And some of these are merely memorandum entries. Now, let's go to your problems in the book. In chapter 11, you find straight problems. Here, we only have 8, 9, 10, and 11 for the straight problems. Okay? So, let's take up the straight problems here. In problem 8, let's begin with problem 8. Rowena Castro Cura, juice supplier, sends 60,000 pesos, 120 sachets of herbal foods worth of goods on consignment to Vidal Macaspel Abadja Enterprises. Following are the costs incurred. Shipping costs paid by Rowena Castro, so meaning the consignor. Reimbursable finishing costs paid by the consignee. Lavadja, being the consignee, advances 3,360. On December 31, 2024, one half of the goods on consignment are sold for 48,000 cash. A 10% commission on sales is earned by Lavadja according to the terms of the consignment. So prepare journal entries that would be made on the consignors and consignees books. Assume the use of perpetual inventory system. And number 2, determine the amount of remittance by preparing the account sales. So in your canvas, we have the solution to problem 8. So you will not find it hard to copy. So in problem 8, we have requirement number 1, the journal entries in the books of the consignor and the consignee. So the first transaction, shipment cost of 600,000 paid by Rowena. However, before that, we have to record the cost of the merchandise shipped. So the entry now in the books of the consignor, we have the shipment of the goods on consignment. We have to debit inventory on consignment and credit to finished goods inventory. So we have to credit finished goods inventory. That's our entry in case we are going to prepare an entry. Or the other option is just to prepare a memorandum entry for this. So now you can see the options. So debit inventory on consignment and credit finished goods inventory for 60,000. Now the consignee has no entry but only a memorandum noting down your inventory received on consignment. Okay. Uh, in the case of the credit by the consignor to finished goods inventory of 60,000 because the problem stated that the perpetual inventory system is used. But if periodic inventory method is used, the credit should be consignment shipments account treated as reduction from the cost of goods available for sale to arrive at cost of goods available for regular sale because this one is on consignment sales. Okay, so these are the options. Will you try to compare this with our illustrative problem when we simply prepared a memo in the books of the consignor? Only memo to record the shipment. Okay, but in the books of the consignee in our illustrative problem, we also prepared a memo. Okay? And we only record the credit to inventory upon recording of the revenue. Anyway, you have the options to use which of this. Okay, now we go to uh, shipping cost of 600. So the payment was made by the consignor. Debit to inventory on consignment and credit to cash. And credit to cash. Now, what we have in our rules is freight and other incidental costs of transferring consigned goods to the consignee, including transportation and insurance, form part of the cost of the consigned goods. That's why we are going to add it to inventory on consignment. We add it to our entry number 1, 600. The consignee has no entry for this, no entry, because actually the amount of the expense was paid by the consignor. Next, reimbursable finishing cost of 2,400 are paid by the consignee. So payment of expenses by the consignee. So the entry of the consignor is inventory on consignment for 2,400 and credit consignee payable or payable to consignee. So the entry is to debit inventory on consignment for the finishing cost. The amount of 2,400 are paid by the consignee. Again, if we have repair costs for damages during the shipment and storage and other maintenance costs are charged to expense, while this one is still a finishing cost. So we have to debit that to inventory on consignment and we credit to payable to consignee or consignee payable the fact that the consignee paid. Now, in the books of the consignee, its entry is to debit consignor receivable and to credit cash. Consignor receivable and to credit cash. Next, we have Lavadja advances 3360. Now, the entry of the consignor for this is to debit cash. Here, advances from consignee is a credit. So, debit to cash, and credit advances to consignee. Debit to cash and credit advances. Advances from consignee. Now, kulo kayuhan nyo lang da ang mga accounts kay daw nagatiriko. So, our entry now is to debit cash and to credit advances from consignee. Now, the consignee will debit advances to consignor and credit to cash. Now, take note, reciprocal entries. If the consignor debits cash, the consignee credits it. If the consignor credits advances from consignee, the consignee will debit advances to consignor. Next, on December 31, 20x4, one half of the goods on consignment are sold for 48,000 cash. So the consignor has no entry. The consignee now will debit to cash and credit consignor payable or payable to consignor for 48,000. Payable to consignor, 48,000. Okay, for the sale of merchandise. Then, a 10% commission is earned by the consignee according to the terms of the consignment. So we have now the notification of sale to consignor and payment of cash due. The commission is 10% of the sales price. So the entry of the consignor now is to debit commission expense 4,800, and then we debit advances from consignee 3,360 because this was a credit in the previous entry. So we now debit advances from consignee for 3,360, and we also debit the amount of 7,440 debit to cash, and also debit consignee payable 2,400. Consignee payable or payable to consignee 2,400, and to credit consignment sales revenue, and to credit consignment sales revenue for 48,000. Abe, kayuhon tani be, daw la ginigataladlong ato ni entry how. I'll repeat the entry of the consignor. Okay, so debit to commission expense, 4,800. Debit advances from consignee, 3,360. Debit to cash for 37,440, and to debit consignee payable 2,400, or debit payable to consignee 2,400, and credit consignment sales revenue, for 48,000. Actually, the amounts are already okay. The only error is in your accounts. Okay. So, debit, commission, expense, 4,800. Debit advances from consignee, 3,360. And debit to cash, 37,440. Debit consignee payable, 2,400. And credit consignment sales revenue. Consignment sales revenue for 48,000. Now, this is your entry in the books of the consignor for the notification. In the books of the consignee, the entry is to debit consignor payable or payable to consignor. Consignor payable, 48,000. Tadlong gid sa consignor payable, 48,000. Credit, commission, revenue. Credit, commission, revenue. Okay, commission, revenue, 4,800. Credit, consignor, receivable. Consignor, receivable. For 37,000. Oh, for 2,400. Consignor receivable, 2,400. Credit to cash, 37,440. Credit to cash, 37,440. And credit advances from. And credit advances from. Okay. Advances from, or you have the account advances there, no? Normally, we have the amount of 3,360 advances to consignor. Advances to consignor. Okay, I'll repeat the entry of the consignee. Debit, consignor payable, 48,000. Credit, commission revenue, 4,800. 4,800. Credit, consignor receivable. Consignor receivable for the amount of 2,400. Credit, consignor receivable for the amount of 2,400. Then we credit to cash for 37,440. 37,440. And credit to, okay, the amount is credited to advances. Advances to consignor. Advances to consignor, 3,360. Okay, 3,360. So at least you try to prove the equality of the debits and the credits. Okay, now we are through with the entries of the consignee. The last entry of the consignor to record cost of goods sold and related costs. So we now debit to cost of goods sold for 31,500 and to credit inventory on consignment and to credit inventory on consignment for 31,500 for 31,500. So what's the amount here? We have the amount of 31,500. So you add 60,600 and 24, you now get the total of 63,000 and you divide that by 2. So 60,000 add 600 add 2,400. total is 63,000. And then we divide by 2 because as stated, only half of the goods consigned were sold. So we now credit to inventory on consignment. Inventory on consignment for 31,500. For 31,500. Okay? So we now have your entries in the books of the consignor and the consignee. Okay. Now, we have requirement number 2, determine the amount of remittance by preparing the account sales. So how much is remitted by the consignee to the consignor? Okay, so we have this amount of remittance remitted by the consignor, by the consignee to the consignor. So let's begin with sales of 48,000. Then we are going to deduct the charges. We are going to deduct the charges for the finishing cost of 2,400 and the commission of 4,800. So the total deduction of 7,200 is due to the consignor. However, the consignee had made an advance of 3,360. So the amount remitted by the consignee to the consignor is 7,440. Remittance enclosed. There is no balance due. There is no balance due. Now, how many units are left with the consignor? Actually, in the problem it stated 120 sachets of herbal foods and only one half of the goods are sold. So the items on hand is 60. The items on hand is 60 sachets of herbal goods. So that will give you 60 times 60,000 times 50%. So you now get 30,000. That's for 60 sachets, not 50, because the total number of sachets is 120 and only one half was sold by the consignee. In other words, the remainder is still 60. Okay? So the items on hand is 60 sachets. Next, we go to problem number 2. Problem number 2. Problem 9. Computation of inventory on consignment and consignment net income. On June 1, 20x4, Ana Villasanta Coaching Company shipped 25 television sets to May and Vera Foods Incorporated on consignment. These sets are to be sold at a price of 24,000. The cost is 12,000 per set. The cost of shipment paid by the consignor was 9,000. The consignor agreed to absorb the consignee's expenditure for freight and also to allow the consignee 1,200 for delivery and installation of each set. Commission is set to be 25% of the sales price. Now, requirement number 1, prepare an account sales and determine the amount of remittance. And number 2, determine the cost of the inventory on consignment and the net income. So for problem number 9, we have now the account sales as required. And second is to determine the cost of the inventory. So in the account sales, we now begin with sold for the account of the consignor. So we have now 4 sales of 8 sets. Why 8? Because as stated, the sets are to be sold at an advertised price of 24,000 and the cost per set is 12. The cost of shipment paid by the consignor was 9,000 and allow the consignee an amount that's equal to 25% of the sales price. And as an added information, 8 sets were sold. 8 sets were sold. That's an added information. 8 sets are sold. So we now multiply 8 by 24,000. That is the selling price. So you get 192,000 and then we deduct the charges for freight in. Why 6,000? The total freight cost paid is 9,000. Divide mo sa how many sets? Okay? Actually, how many sets were delivered, no? Ship 25 television sets. Okay. And why is the freight cost equal to the amount of 6,000? So you now have your freight cost is equal to 9,000 divided by 25 sets. That's your freight out. So it's equal to 3,600 per freight cost. The freight in is 6,000. That's the freight in. And you have your advertising expense, 2,400, delivery and installation for 9,600, repairs on units sold, 4,800, and the commission is 25% of sales. So we now deduct the following from, okay, sold for the account of 192,000. Then we deduct the charges, freight in, 6,000. Advertising expense given at 2,400. At 2,400. Then, deliveries and installation, 9,600. And we have your repairs expense on units sold, 4,800. And the commission is 25% of sales. Okay, so we now have the total deductions of 70,800. Okay, that's your total deductions. Okay, so will you add the following information in the problem here, which is not included? Okay, add the following information in the problem. 8 sets are sold. 8 sets are sold. Freight in. Freight in. 6,000. Then, advertising expense for 2,400. 2,400. Delivery and installation for 9,600. 9,600 is 1,200 there how many? I stated that the consignee's expenditure for freight and also to allow the consignee 1,200 for delivery and installation of each set. So your 9,600, actually you can get it by multiplying 1,200 times 8. So you get 9,600. And to be given as an added information, repairs amounting to 4,800. Repairs amounting to 4,800. Okay, so you get the total that's equal to 70,800. 70,800. That's now on your charges. So 192,000 minus 70,800. The balance is 121,200 due to consignor. There is no amount of advance, so the balance is 121,200, and you have the remittance enclosed only in the amount of 30,000. So the balance due is still 91,200. And the items on hand is only 15 out of 25. 8 were sold, 17 remain, but only 15 are on hand because the 2 items were returned because of defect. Okay, so in the problem, you have to add the following data missing in the problem. 8 sets are sold. 8 sets are sold. 2 sets are returned because of defects. 2 sets are returned because of defects. Next, freight in. Freight in. The amount of 6,000. Freight in the amount of 6,000. Okay, next, advertising expense, 2,400. Advertising expense, 2,400. And you have your repairs expense on units sold. Repairs expense on units sold, 4,800. Okay, so you have this data missing in the problem, and your freight in, advertising expense, delivery and installation, and your repairs on units sold were paid by the consignee. Were paid by the consignee. Were paid by the consignee. Okay, so we have the account sales showing that the remittance is only 30,000. There is still a balance of the remittance of the amount due. There's a balance of 91,200. Okay, we go to requirement number 2. Determine the cost of the inventory on consignment and the net income. So the inventory on consignment, now we have the following: charge analysis. The consignment sales is only good for the total of 25 units. Only 8 were sold and 2 were returned because of defects. So we now begin with the charges by consignor. The cost of consigned goods, we have at 12%. So times 8, the number of sets sold equals 96,000. The number of sets remaining, 180,000. We have total of 23 sets, but you have one set with defect. So the cost of that is for 12,000 times 2. Now you have to create another column that will give you 96,000, 180,000, and the 24,000, the cost of two sets that were defective in one column. Then we have the freight out, 9,000 divided by 25. So you get the result of 360 per set. 9,000 divided by 25. 360 per set. Why do we charge on the sales? We charge freight on sets returned is charged against sales of the period. So we get 3,600 by multiplying 360 by 10. And then we have 360 by 15 on the number of sets that remain. Next, we have the charges of the consignee. For the freight in, that's 6,000 divided by 25. So per unit is 240. And then we multiply it by 10, including the freight on the units that were defective. Units that were defective. So we have 2,400. 240 times 15 is 3,600. So you now get the total column. Advertising expense, charged to the current operations, 2,400. Delivery and installation is for 1,000 or for 8 units times. Okay, in other words, only the units sold. Repairs, before the units were sold, the consignee incurred repairs of 4,800 and the commission equal to 4,800. So now we have the total for 166,800 charged to sales and the inventory of 189,000. So the total column of 379,800. Now we compute for the consignment net income. Consignment net income is sales 192,000. That's for your sales of the 8 units. So we now multiply 8 by 24,000. Then we deduct costs and expenses, charges of the consignor. We have the cost of consigned goods. We multiply 12,000 per set times 8, the number of units sold. So you get 96,000. And then on the freight out, 3,600. And then the charges of the consignee for freight in, 2004, advertising, 2004, delivery installation, 4,800, and commission of 48,000. So we have the net income equal to 25,200. 25,200. Now that's your net income for the current year. Okay, we have problem number 3. Problem number 3 for the requirements or problem 10. On May 30, 2008, Patrick Garcia and Charlie Legaspi Group consigned 80 freezers to costing 50,000 each to Ferdi Coico and Net Bunyag Company. The cost of shipping the freezers amounted to 84,000 and was paid by Patrick Garcia and Charlie Legaspi Group. On December 30, 20x8, a report was received from the consignee indicating that 40 freezers had been sold for 75,000 each. Remittance was made by the consignee for the amount due after deducting a commission of 6%, advertising of 20,000, and total installation cost of 32,000 on the freezer sold. Compute for the inventory value of the units unsold in the hands of the consignee. Compute for the profit for the consignor for the units sold. And number 3, compute for the amount of cash remitted by the consignee. Okay, so we have to use a similar problem, similar table as that in problem 9. Requirement number 2. So we now compute for the inventoriable cost. We compute for the inventoriable cost for 80 unit ship at cost of 50 each. So that means 4 million. The freight is 84,000. That's given. So the total is 4,084,000. And we divide that by 2 or just multiply it by 50% because the problem stated that only 40 freezers had been sold. So we only have the inventory of 2,042 for the units on hand. Then we compute now for the consignment profit. We have the consignment sales, 40 units at 75. So you get 3 million. Then we have the cost of the units sold. Actually, one half of the units, one half was sold. So we have to deduct 2,042,000. And then the commission of the consignee is equal to 6% of the sales price. So you have now 180,000. And the consignee paid the advertising cost of 20,000 and the installation cost. So we now get the difference of 726,000. That's for the profit. And how much was remitted by the consignee? Sales price of 3 million minus the commission, the advertising cost, and the installation. So the total deduction by the consignee is 232,000. The amount of remittance from the consignee is 2,768,000. Now that's for problem number 10. Okay, we go to problem number 11. That's the last straight problem in the book of Dayag. Number 11, MG Marti and the Athena Duenas Electronics Company sends appliances to dealers on a consignment basis. The selling price per unit is 920 and the dealer earns a 30% commission. The manufacturing cost is 570. Assume that in 20x4, 800 units were sent on consignment to IV Marasigan and Vidal Makasait. 400 of these units were sold for cash by December 31, 2024. Remittance had been made for 380 units. Prepare the required journal entries on the books of MG Marti and Alcena Duenas. Actually, they are the Marti and the Alcena Duenas are the consignor. Electronics Company and Ivy Marasigan, and so meaning in the books of the consignor and the consignee. Now we begin with the books of the consignor. The entry of the consignor is to debit inventory on consignment 800 times 570 and credit to finished goods inventory. Second entry is to debit consignment expense 368,000. Again, we debit to accounts receivable on consignee sales and to credit sales revenue for 368,000 because 400 units were sold at 920 and the commission for the 400 units is 110,400. That is at 30%. So we have now the cost of consigned goods or the cost of sales at 570 and we credit to inventory on consignment. We debit to cash for the amount of the remittance, but only applicable to 380 units. So we now debit to cash 920 times 70% times 380 in the books of the consignor. Only 70% because the 30% will go to the consignee. In fact, you have already recorded consignment expense in the entry number 2. You may debit that to commission expense. So we now credit to accounts receivable. In other words, there is still a balance applicable to 200 units. Now, in the books of the consignee, with the no entry upon the receipt of the consigned merchandise, then we debit to cash upon sale, we credit to consignor payable, reciprocal to the debit to accounts receivable of the consignor, then credit to commission revenue, then debit consignor payable for the remittance and to credit cash. Okay? So those are the solutions to your straight problems. Now we go to multiple choice problems. We have only part of the multiple choice problems in the book. We only begin with number 52 for in relation to consignment sales. So will you now open to problem number 52 for consignment sales. We have a few problems because some of these are related to other topics. So page 938. Okay, so we have page 938 and we now refer to problem number 52. Problem number 52 in relation to consignment sales. So we now begin with problem 52. Okay, so everybody, you refer to questions 52 up to 54. Let's try to answer the problem up to the end if we can do it. 52 to 54. On June 1, the company shipped 25 DVD to BBB store on consignment. The DVD is to be sold at an advertised price of 200 per item because to the consignor is 100. The consignor paid 75 to ship the merchandise. Commission is to be 25% of the sales price. During the month, 2 DVD were returned. On June 30, BB View Store remitted the amount due to the consignor after deducting commission of 400. Okay, so after deducting commission of 400. The amount remitted by BB View Store is, so number 52. Let's now compute for the amount remitted. Here we have sales. Sales, 1,600. 1,600. Then we deduct commission of consignee. Commission of consignee is given. Okay? Commission of consignee is given. So we have the amount remitted by Beta is 1,200. That's letter C. Okay? So we have now your answer to letter C. Right? Number 53. The consignment profit is. So we now get the profit computed as follows. Okay, column 1, total charges. Column 2, consignment sales. Column 3, inventory. So column 1, total charges. Column 2, consignment sales. Column 3, inventory. So we now get the consignors charges. Consignors charges for 25, that's 2,500. 2,500. That is at 100 per item. So 2,500. Sold 8 units. So you have 100 times 8. Inventory is 15 times 100, 1,500. Because the 2 units that were found defective here, 2 DVD were returned. So we have 2. Okay. Now for the cost, we now multiplied 100 times 8. So you get 800 and 1,500 for the inventory. For the freight out, the freight paid by the consignor is equal to the amount of 75. So meaning it was 3. So the number of units sold is 8. However, sales should shoulder the defective units that were returned. So 30 is computed by multiplying 10 by 3. 10 is 8 plus 2. Then 15 times 3 equals 45. The commission of the consignee is at 25% of sales, no? So what is the commission? The commission is to be at 25% of the sales price. And how much is the sales price? It's stated that the advertised sales price is at 200 times 8. So your sales price is 1,600. The commission is 25% times 1,600. So the commission is equal to 400. The commission is equal to 400. I am now trying to begin with the multiple choice problems, okay? So you have here the computations of the multiple choice problems. What I'm trying to explain now is how did we arrive at 30? So meaning you divided 75 by 25, you get 3. 3 times 10 is 30. Why? You have sold only 8 units, but you have 2 that were returned. So 8 plus 2, that makes 10. You multiply it by 3, you get 30. Okay? And the commission is computed at 25% of 1,600. So you get 400. Sales price is 8 times 200. So you get 1,600. So for the consignment sales, we now compute number 52, the amount remitted is computed as letter C. The profit is, you now get 800 cost plus 30 plus 400 is 1,230, and then the selling price of 1,600. So the profit is 370. That's number 53 is letter A. Then number 54, the cost of the inventory on consignment amounted to 1,545 as the sum of the cost. That's equal to 100 times 15 and the freight out of 45. So you get 1,545. In number 54, the answer is letter C. Okay? Letter C. Then number 55, we have now another problem. On August 5, 20X5, Famous Furniture shipped 20 dining sets on consignment to furniture outlet. The cost of each dining set was 350. The cost of shipping the dining sets amounted to 1,800 and was paid by Famous Furniture. On December 31, 20X5, the consignor reported the sale of 15 dining sets at 850. The consignee remitted payment for the amount due after deducting a 6% commission, advertising expense of 300, and installation and setup cost of 390. So, the question in number 55 is, the amount of cash received by Famous Furniture is equal to, so that would mean 850 per unit multiplied by 15. So you get now 850 multiplied by 15. Okay, 1275. And then you multiply that by commission. That's 12,750 times commission equal to 6% is equal to 765. And you have to deduct 300 and 390. So 390 now is the installation and setup and advertising cost of 300 pesos. So we have now 12,750. Then we deduct the commission of 765. 65 and also deduct 300 and 390. So the amount left is 11,295. That's letter C. Number 6, famous furniture ship 20 dining sets on consignment to furniture outlet. The cost of each dining set was 350. The cost of shipping the dining sets amounted to 1,800 and was paid by Famous. On December 30, 20X5, the consignee reported the sale of 15 dining sets at 850 each. The consignee remitted payment for the amount due after deducting 6% commission, advertising expense of 300, and setup cost of 390. Now, the total profit on the units sold by the consignor is, in number 56, again, it's similar to number 55. From 11,295, we have to deduct 15 times 350. That's the cost of the dining set. And you get 6,045. The question is asking for the total profit on units sold for the consignor is equal to 6,045. Now, that's the total profit on units sold for the consignor. So, we are deducting from 11,295. We are deducting the amount of 5,250, leaving a balance equal to 6,045. That's now after deducting 15 per unit, that's the cost. That's the cost of the dining set. However, we have not yet deducted the commission. So the commission is equal to, take note that in letter C, the problem is asking for the total profit on units sold. So 11,295, that's the result of multiplying the number of units sold as stated is 15, and you multiply that by the selling price. Okay, the cost of each dining set is 350, so the cost is 5,250, and the selling price per unit is 850. So what will be your profit, or what will be in number 6? We are asked to determine the amount of profit on the unit sold for the consignor. Now, why do we have 11,295? On December 30, 20X5, the consignor reported the sale of 15 dining sets at 850. So you get 12,750. 12,750. And the commission of the consignee is equal to 765. So the difference is equal to 11,985. And we deduct 690. So the difference is 11,295. And we deduct the cost, so we get 645. Okay, 6,045 for number 56. Now, The solution given to us the problem is shortcut. So let me give you the longer solution. We have the sales price 12,750 taken by multiplying 850 by 15. So 12,750. Then we deduct the commission equal to 765. That's 6% of 12,750. So you get 765. So the difference is 11,985, and then we deduct the advertising cost and the setup cost, total of 690. So the difference is 11,295, and we deduct the cost, which is 5,250. That's taken by multiplying 15 by 350. So the difference now is 6,045. 6,045. So number 56 is letter C. Okay, number 56 is letter C. Next, we go to 57 to 59. TS Trading consigned 100 beds costing 600 each to PP Company. The advertised selling price is 1,000 per bed. Consignment agreement provides that the consignee is to be allowed a commission of 15% of the selling price. PP Company has to draw a site draft for 60% of the cost of the beds. The advance is to be recovered periodically by monthly deductions in proportion to units sold from the remittances which accompany the account sales. All expenses of the consignee are to be deducted monthly as incurred. At the end of the first month, the consignee rendered an account sales showing, among others, the following charges: commission 2,250, advertising 1,500, and delivery expense of 750. The number of units sold by PP Company is, so we now get sales at a price of 2,250. No, the selling price is 1,000 each bed. And we have now in number 57. We are dividing 2,250 by 15%. So that gives 15,000. That's your sales. As stated, the commission is 2,250 and the rate is 15%. So in determining sales, we just divide the commission by 15%. So you get 15,000. Then the 15,000 divided by the selling price of 1,000 per bed. So that will give you the number of units sold is equal to 15. In number 57, letter B. In number 58, the amount remitted to TS Company for the month is sales 15,000. Then we deduct the commission of 2,250, the advertising cost of 1,500, delivery expense of 750. So we now deduct the total charges of 4,500. The difference is due to consignor 10,500. Now we have to deduct the advance for the value of the note, the site draft. For the 100 bed sheet, you multiply it by 600 per bed and you multiply it by 60%. 60% is the site draft. The site draft is at 60% of the total cost of the beds. The total cost of the beds is 60,000. We multiply it by 60%. So the value of the site draft is 130. The value of the site draft is 36,000. Then we multiply by proportionate number of beds sold is only this time only 15 beds were sold divided by 100 and you multiply it by 36,000. The site draft, the value that will be partially deductible is only 5,400 since it stated that the value of the site draft will be deductible. The advance is to be recovered periodically by monthly deduction in proportion to the number of units sold. So we now deduct only 5,400. The amount remitted by the consignee to the consignor is equal to 5,100. That's in number 58. In number 59, the consignment profit or loss is, so the number of units sold is 15, selling price 15,000. The charges, we have now the cost of the bed is 600 per bed times 15, 9,000. The charges of the consignee for commission, for advertising cost, and for delivery expense 4,500. So the net income in during the month is only for 1,500. So that's letter D. The answer is 1,500. It's a net income. That's why it cannot be letter A. Okay, so in number 59, the answer is D as in dog, 1,500. Next, we go to number 60. By the way, we are only up to number 85, no? Number 85 lang. So anyway, let's continue. In number 60, November 30, North Up Company consigned 90 freezers to Watson Company for sale at 1,600 each and paid 1,200 for transportation cost. So 90 freezers and the selling price is 1,600 each. A report of sales was received on December 30 from Watson reporting the sale of 20 freezers together with a remittance of the 27,200 balance due. The remittance was net of the agreed 15% commission. How much and in what month should Northup recognize as consignment sales revenue? So we are now given the consigned freezers on November 30. But the problem now is asking for how much and in what month should Northup recognize as consignment sales revenue? So the sales is unknown. The commission is 15%. Okay? 15%. And so we have now the remittance is given at 27,200 together with a remittance of 27,200 balance due. So X is the sales amount minus 15% X That 15% is the commission as given, the 15% commission. So x minus 15% x equals 27,200. 85% x equals 27,200. So x is equal to 32,000. X is equal to 32,000. That's your how much and in what month should Northup recognize as consignment sales revenue. So in November, uh, 0, but in December, the revenue of 32,000. So the answer in number 60 is letter A. Number 60 is letter A. Now we go to 61 and 62. On October 1, 20x4, on October 1, 20x4, an N company consigned 100 wall clocks to P&G Retailers Incorporated. Each wall clock had a cost 150. Freight on the shipment was paid by an company for 200. Okay, so that is on 100 wall clocks. On December 1, 20x4, P&G submitted an account sales stating that it had sold 60 pieces and it was remitting 12,840 balance due. The remittance was net of the following deductions: the commission equivalent to 20%, advertising 500, delivery and installation 100. What was the total sales price? Okay, of the wall clocks sold by P&G Retailers Incorporated. Okay, number 61. Okay, so how do we compute for it? The sales price is unknown. Then we deduct the charges, advertising for 500, then delivery and installation 100, commission is 20%. It's still unknown. So the remittance is 12,840. So initially, sales X. Then we have charges, advertising 500, delivery 100, commission 20% X. So the remittance is 12,840. X, the amount of sales, minus 500, minus the sum of 500, 100, and 20% X equals 12,840. I'll repeat. X minus the sum of 500 plus 100 plus 20% X equals 12,840. X minus 20% X equals 12,840 plus 600. 12,840 plus 600. 80% X equals 13,440. 80% X equals 13,440. So X is 16,800. Anyway, you can prove if this is correct by fill in the blanks. Sales 16,800, advertising 500, and delivery 100, and your commission is equal to 2,000, 3,360. So 3,360 plus 600, you now get 3,960. So the difference is equal to 12,840. That's your remittance. Okay, so number 61 is letter C. 61 is letter C. Now we go to number 62. 62, the amount is 6,080. The problem is asking for the cost of the inventory. So the cost of the inventory is 150 times 40. Okay, 150 times 40. Okay, kay ang nabaligya only 60. So, we have the inventory with 40 units. You multiply that by 150, the cost. So, you get cost total of 6,000. Then we are going to add the freight on shipment. The total freight cost is 200. And we multiply it by 40 over 100. Or you divide 200 by 100, you get 2. You multiply by 40. So the freight on shipment is 80. Or 200 times 40 over 100, 80. So the total cost of the inventory in number 62 is letter B as in boy, 6,080. Next, number 63 to 65. CC Company delivered 10 DVD players to CLTV Company on consignment. The DVD player cost 3,000 each and are to be sold for 5,000. The CC Manufacturing Company paid shipment cost of 2,500. CLTV submitted an account sales stating that it had returned 1 unit and was remitting 21,900. This amount represents the total amount due to CC after deducting the following from the selling price. So we have the commission, 20%, advertising, delivery, and cartage. The number of units sold is, in number 63, the number of units sold is computed as follows. The sales is unknown. The charges are, say, sales is equal to X. Sales is X. Then we deduct the charges, commission, unknown. That's 20% of X. Commission is 20% of X. Advertising, 1,000. Delivery, 600. Cartage, 500. So, the total, you have to get or arrive at the remittance of 21,900. So we now equate X minus the sum of 20% X plus 1,000 plus 600 plus 500 equals 21,900. So X minus the sum of 20% X plus 1,000 plus 600 plus 500. So you get 21,900. X minus 20% X equals 21,900 plus 2,100. So X minus 20X equals 21,900 plus 2,100. 2,100 is the sum of 1,600 and 500. So finally, 80% X equals 24,000. X is equal to 30,000 divided by 5,000, this selling price per set, so that in number 64, the number of units sold is number 63. The number of units sold is 6. That's letter C. Number 64, the profit or loss on consignment realized is equal to. So number 64, let's now compute for. You draw 3 columns, total charges, consignment sales, inventory on consignment. So consignment charges, the cost per unit is 3,000 times 10 equals 30,000. Sold, 18,000 ang iyang cost. Inventory is 9,000. One unit was returned. So we have now the freight out, 2,500 as paid by CC. So for the sales, you divide 2,500 by 10, that will give you 250, and the number of units charged to sales is 7. That's 6 plus 1. That was returned. So you get 250 per set na freight out times 7. So you get 1,750. And the inventory is 250 times 3. Then the charges of the consignee, commission, 20% times the amount of sales of 30,000 for the total of 6,000. For the commission, advertising given is 1,000, and delivery and installation are given. So advertising 1,000, delivery and installation 600, and we have the cartage that's equal to 500. So ang cartage allocated, that's 500 divided by 10. So 7 times 50 and 3 times 50. So we now get the total of the charges to consignment sales. Will you now take note of the selling price of the unit sold? 5,000 times 6. So the 30,000, this is 5,000 units times 6. So you get 30,000. The basis of commission is the selling price and not the cost. So your commission is 20% of the selling price, that is 30,000. The selling price of 30,000 is taken by multiplying 5,000 by 6. So you get 30,000. The commission rate is 20%. So you get 6,000. So that in number 64, number 64, the profit or loss. Okay? So you have the profit of 2,300. And the cost of the inventory in number 65 is none of the above. That's 9,900 computed in the last column. The sum of the cost and the freight out and the cartage. So you now get the total of 9,900 for number 65. Okay? Now, I'll give you the letter answers. Anyway, you already have this. Up to number 85, you already have the solutions. So just study up to number 85 for the solutions to the multiple choice problems, and for the theory. You have a very, very short theory in the multiple choice. So just study the letter answers to the multiple choice theory. Anyway, you already have it here. So you don't need to answer because you already have the answers. So to the multiple choice theory, we only have the multiple choice theory numbers 20 to 33 applies to consignment sales. Okay? So no more assignment for consignment sales, but you had an assignment on installment sales. The 10 problems that I have posted in the Canvas yesterday. So by tomorrow, we will take up those problems. And if we still have the time, we will move to insurance contracts, and insurance contracts is found in chapter 22, insurance contracts. That will end up our coverage for the first final exam that will be given on Monday. So we will have modules 11 down to 16, and you'll be given a total of 150 points. Okay? See you tomorrow. Okay, namik. Sobraman dua gid ka oras eh. And nag-start ko 10:50.